Okay. Good morning, everybody. Don't worry, it's not you, it's not me. It's YouTube. Hang on. So now I got a... What a strange setup. All right. I guess Google and YouTube are just a tiny little startup. They don't have much money or resources. So they're doing the best they can, so we should stay patient. But let's go! Boop, 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 boop. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. It's nice to meet you. Oh. Right. Sorry, I have to turn the light on. It's almost like band. Ah. Yeah, I gotta get that light on. A little better? Makes me look pasty. Wait, I am pasty. So anyways, hey. What leverage do you use? 50 to 1 and 100 to 1 is enough, depending on where in the world you are. You don't need more than that. If you're using more than that, you're not doing it right. That's the bottom line. Okay? So anyways, hey, visit tradersway.com. They'll give you the leverage that you want. The leverage that you need is more important. So yeah, don't go more than that. Okay? When you're at Traders Way, open up an account. A demo is fine. It's a way to start a relationship. You can download MT4. You can then check out the execution speed. You can check out the spreads. You can check out the swaps. If you don't like spreads, then do an ECN account. By the way, the swaps are amazing. So that is enough just to go check them out and give them opportunity to earn your loyalty and respect. I'm here every single day on behalf of Traders Way to help you find the success that you deserve. And by deserve, I mean if you're working blood, sweat, and tears for years, it's going to happen because I'm going to keep you on the right track and keep you focused. If you're looking for a quick buck, if you're looking to get rich quick, it doesn't exist. That's a dream for poor people that stay poor. Okay? It's a fantasy to think someone gets, unbelievably successful quick and easy. It just doesn't make any sense. And for you, now it's kind of weird. Like for you Christians, we're 15 days away from Santa Claus. It's kind of a weird thing. So, anyways, good to have you in my life. I like trading. I like you. I like us. So thank you for being here every single day. And thank you to the loyalty and respect you show me every day. Hey, I want some feedback. I'm tweaking on sort of an updated version of a day trading template. I was wondering what you thought about this. Now I got to find my drawing tool because I got so many windows open now to get this YouTube thing going. It's crazy. Forget about it. So hang on, let me get this drawing tool going. I think it's there. But what's your first impressions? Do you see anything? Do you like it? Do you not like it? Looks neat. Drawing tool still hasn't kicked in. All right, I'll double click it again. I had so much going on in class last night that I got all these windows open. I think it's frying out my processor on this old laptop. I hooked up my new laptop and for some reason it won't do the high resolution or the crazy resolution of my monitor. So, got to go to something else. All right, got my drawing tool. So there's a couple of things going on here. I don't know if I like it either. But you'll notice that we got a regression channel going on here. Okay. And this is just a 5-minute chart, right? So there's a bit of a regression channel going on there. And then there's a regression channel going on here on the smaller time frame. So what it's trying to do is kind of look at the 5-minute market and the 15-minute market at the same time, kind of to see trends within inside of trends. And then if you back out just a little more, give it a couple extra clicks, you'll see there's another trend. Let me put this on a 15-minute chart. So looking at it this way, it's saying, all right, the market was going this way basically on an hourly chart, going this way on a 15-minute chart, and going this way on a 5-minute chart. And I don't know if that helps you see, because the whole point of me messing around with these things is to help you see, right, these steps. But it's all the same thing. Like, don't go all ape crazy like this is something new. This is nothing new. I'm just trying to see if this will help you see things like trends and trends. I don't know. And that's more important in day trading. The other thing you'll notice is that this is set up for a bear. So all of this has been an uptrend, right? And maybe you tried here as a bear, but it's not really a good sell because you can see we're making higher highs and higher lows. So see, that's one thing I worry about you guys. I say you should be a bull or a bear, and you should stay a bull or a bear because based on your fundamentals. And then what you end up doing is, because you're a bear, you sell every day, sell every day, sell every day. And what you're ignoring is, dude, this is an uptrend. You understand? Like, what are you doing? No, I know, Max. Max, I actually have been trying to sleep the other day. So when you send me emails at 12 a.m., I'm up, but I have to go to bed. So, yeah, we'll get that taken care of. All right. Okay, so if you see that's going up and you're a bear, doesn't mean you sell here, sell here, sell here. So that's kind of interesting, right? But it gave a nice sell zone every day. But like I can switch this now. And I think I got this saved. I hope I got this saved. What if I was a bull in that situation, even though I'm not? And yeah, that didn't save. Or did it save? No, it didn't save. So, what the hell? It's a limit. Hang on. So I didn't save it, but anyway, so I'm working on stuff. Basically, I was bored in the middle of class yesterday. So I was doing this while my professor was talking. What? It didn't save at all? Uh-oh. Oh, man, I got to do the whole thing over again. Why didn't it save it? Maybe I've forgotten what I called it. Oh, that's right. Day trading bullish. There we go. So it's a day trading chart. So this is the bullish version. So if you happen to be a bull, it ignores all the other things, right? So it's still telling you, okay, on this, oops, let's delete all this. It's still telling you on the high time frame, like an hourly, it's generally a little bit down. On a little bit smaller time frame, like a 15-minute, okay? And then in here, there's something going on. I can't even quite see it. I guess it's this way. But notice that this is your daily buy zone, this is your daily buy zone, this is your daily buy zone, this is your daily buy zone. And we haven't quite hit today's buy zone. And then, of course, this is tomorrow's. Tomorrow. Tomorrow. So I don't know. So I'm pissing around in the middle of the night trying to get this to work for you guys. Okay. This was the projected target. 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 So it's giving you targets and stuff as well. So like today, what the market was telling us, remember, it's not me. It's not even the indicator. It's the market is saying, like, this is what it's going to try to do. Oops. Anyways, whatever. Whatever. Don't worry about it. Okay. We should do what? Sorry, I'm a little bit slow today. How would I know that, James? I haven't even created it yet. I haven't invented it yet, James. All right. What were you doing? All right. So yesterday we were talking about the mean reversion. Oops. Right? Do you remember this? How many people would agree we talked about this coming down yesterday, not going further up? How many people would agree with that simple aspect of this analysis, that we looked at it and said down, but definitely not up? Okay, remember, it's just a plan. It doesn't mean it has to be right. But we talked a lot about things. Like, we talked about monthly targets. We talked about OOP, out of position trades, where you ride the 21. We talked about, what else? I think what we also talked about, correct me if I'm wrong, because we talked about a lot of different pairs, but maybe it comes back up and then back down in the next few days. What else? I guess that's all I see right now. And I guess all of this fits because I would like the Swiss franc to strengthen between now and the third week of January. Max, it's in the swing trading course. So if you're in the swing trading course, it's in there. It's out of position. All right. Okay. So we got this sitting here, and I'm short at the still short at the M4. Last week it was a cluster of weekly M4 and monthly M4, and now we're still in there. And we got the election in a couple of days and all this kind of stuff. The UK is going to start being flooded, if it hasn't already been done. It's going to get flooded with statistical analysis to tell you who's going to win before they win. So I don't know if that's happened, but that's probably going to start happening. This company is going to predict this, that company is going to predict that, and they're going to use statistics to do it. And it's going to get reported on TV, it's going to get reported in the newspapers, and therefore it's going to freak people out, good or bad. And the pound could get ridiculously strong, or the pound could get ridiculously weak. Is it already happening, Adam? Yeah. So there you go. But what do we know technically? We know that this predicts this. So this should not go higher. Well, if you were a bear anyways, you would not want this to go higher than 143.50, because this actually predicts 143.50. And there should be profit taking unless there's irrational exuberance. Okay. So I'm just kind of playing it technically because I don't really know. I told you this one would be dangerous. But look at what we did plan though here. Do you guys remember how long we were in here? Who remembers the speeches I did when we were in this? Okay. Remember? It's going to move sideways forever and ever and ever until it breaks. Cool, right? So one would still think there's plausibility of this first, even if you're a bull. Okay. So I got to keep an eye on this one. Now, what if all yen pairs are moving up? I should freak out as a bear, right? But what if the other yen pairs are moving down? Should I freak out about this one? No, because it's pound related. I should still manage the risk, but it'd make me feel a lot better if I'm buying Japanese yen here and the Japanese yen is appreciating against everything else. Then I can say, oh, well, this is a pound issue, not a yen issue, right? So let's take a look at some more yens. So let's take a look at Kitty CAD. This was that piss poor entry I did. I mean, I tried to handle it properly. Again, I'll bring you back through history. I sold other yen pairs at this point in time. And then I found it down here. And I'm like, oh my God, I shorted like 5 or 6 other currencies. And they're all profitable. And then I look at CAD yen and I'm like, oh, son of a gun, I'm not on CAD yen. Why am I not on CAD yen? Well, I want to get on CAD yen. And it was way low. And, you know, I can't really expect to sell up here, is what I'm thinking at the time. But I can't sell low either. So I made a determination on a higher time frame than this, that this was going to be a good place to sell. If we had a scenario like this, okay? I didn't expect it, but I said if it did, it gave me sort of a second chance. Well, it gave it to me. And I paid a penalty for throwing down a limit order, I suppose. Kind of a crappy entry. But if I survive this one, that's pretty good. Then that's good, right? So I'll have to move my stop. Oh yeah, by the way, do you remember I moved my stop on Euro ZAR yesterday? I did get knocked out. South African Rand moved yesterday. I got knocked out with 400 pips profit. So that's a bummer. But anyways, there you go. 400 pips profit. Sat on it for a while, but I would have liked to have sat on it longer. It just made me think about, like, when do I move this stop, right? And so that's what we did yesterday. So it doesn't matter about emotions, really, because if it makes a higher high and I'm short, I'm out. I don't need any more, right? So anyways, I'm hoping we can stay through here. I'm not really looking at these moving averages. I mean, it looks like the moving averages are holding these down. But, oh, that's true. 400 pips plus carry. But I think I was only short like 2 or 3 months. Right? So I probably earned like 300% return on investment on interest and 400% return on investment in pips. So 700% return on investment for 3 months. Yeah, you know, amateur hour, I know, but I'm trying. I'm trying to improve. So anyways, I'm not really looking at these moving averages as support and resistance. I think you see what you want to see. I mean, it looks like it's happening. So I think this is more range bound. So then why are you using trending lagging indicators when it's not trending, right? So right now my trade is in a piss poor position. I'm in the middle of the range, which sucks, but I still have my seasonality play going. So I don't feel good with my pound because my pound yen's going up, and I don't feel good with my CAD because my CAD yen is going sideways. So I'm like, oh. So let's take a look at something else. Let's take a look at, well, we did Kiwi Swissy. Let's get off these then. I thought I was on yens. So CAD yen, so we'll do Euro yen now. Okay. Euro yen, a little better. So I'm short here. I'm still happy with that. Down, 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 up, up, sell, right? Down, 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 down. Now this is a bit dangerous because it's not much of a lower low. Technically it is a lower low. So you would assume lower high, lower low. So if I were me, I could consider in this price here near this 120, 30-ish area, I could add another one to the downside. Okay, so you would be predicting the next one down. So maybe I throw down my day trading from here, right? So then I could go into, do I have a day trading short? Where, I had it up here somewhere, FX Bootcamp. Oh, day trading bullish. So I can go to this and then go to my indicators. Biased pivots. See, buy FX Bootcamp training. All right, so biased pivots, bearish mode, because I'm a bear. And I go Pachowser. I think that color's too dark too. So one of the things I'm messing around with, oops, is changing the color and from Indian red to something a little more like misty rose, plum. Because I don't need it in my face, okay? So these are areas in which I might consider selling if I thought this was a downtrend. You get that? So remember how I made the comment, like I'm a little concerned that we barely got a lower low? Well, so is this chart is also telling you the same thing. If it was so bearish, it was supposed to do this, and it hasn't. Okay? So really, tomorrow, between now and tomorrow, I could short here, or I need to be careful that the downward move is over and these are steps on the way up. Okay? Because ideally, these, you know, you have a trend down, right? These are all trending down. So like this shallow lower low is a danger zone, and we knew it yesterday. I believe I mentioned it yesterday, and it didn't follow through. You know, really, if you think about it, the 120.000 should have held it down, right? Right? At least on this time frame. Now you can change this to get out of day trading, and we could put this to swing trading bearish weekly. And what that's saying is if I'm a bear this week, I want to sell here. That's pretty easy. That's why I'm trying to, right? I'm trying to clean this up as much as I possibly can for people. That's all that says is if I'm a bear, I want to start selling around 120.36. That's pretty easy to see, right? Where do I sell in? Right there. Okay. So I'd say even 120.50 seems the most likely, but whatever. So that's the weekly trade plan right now. Oops. Didn't want to do that. That would be like an example of your trade plan for the week. This is weekly. Fambo Bix. Okay. So anyways, just ideas I'm playing around with. This one we did already. Kiwi yen. And let's back this out. Okay. Notice how the monthly R2 was important. Okay. Notice this is a weekly swing to the downside. So if you prefer the price action now, you would use this as a roll reversal, right? So your plan would be down, 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 up, up, right? Down, 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 down. And of course, this was from some other analysis. Okay, and your next move today, your plan today would be up, up, sell. Jimbo is something I invented. Okay. So again, you could add that to your, like, what I'm trying to show you is that's a strategy, right? So now you have tactics. So like if you were trading now tactically, you would take the same idea and you would say like, where's my day trading? Bullish. And of course, I don't have the bearish one set up yet. So I have to go to indicators and put this in bearish mode. So if I were a bear and I were to marry, and I don't know if you guys like this pink. It's just less in your face. Okay, but anyway, so if I'm in bearish mode now, I might be on a 5-minute chart. There we go. Finally caught up. Okay. So this is tomorrow. Tomorrow's sell zone. So that's Oscar Mike. Well, would news just come out for this? That's more volatility on this pair than 5 or 6 hours. So what's going on with Kiwi? Maybe it's yen, huh? Check this out. Here's something else I messed around with in class yesterday. I was so tired. Like, I can't follow what this guy's talking about. Oops. So I did this. Change this to 333. Change this to 333. Change this to 133. And you go, boom. So now I'll take this and say template and save template. And it's day trading, but not bullish, it's bearish. Cool. Okay. Well, we're still an hour away from the S&P 500 open. Okay. I'm wondering if it was time for a Trump tweet. I mean, obviously news came out 4 minutes ago. But the big news is really, you know, the central bank meetings tomorrow and then the vote on Thursday. Right. Well, the question is why, Mr. Right? Right, Mr. Highvolt? Why? They delayed the tariffs? All right, that's going to be bad for me. So I need to be careful. Yeah, I know what a pump and dump is, but if that's related to a delay in tariffs, that's not a pump and dump. So Max says he likes that template. Max, do you like these automatic trend lines? It's something I took off MetaTraders. And just showing people how to use the tools that are on MetaTraders. So this has longer term, medium term, and short term trends. So you can see this is a break to the outside. Right, and it's doing all this automatically. And then if you're scalping or day trading, right, you have a channel here and a channel here. So you're okay. Yeah, Cash, someone else said it, unless they were just guessing. And then for shame. Okay, so if you were still a bear, regardless of the volatility of news, right? You're at tomorrow's sell zone. So you're already done today. Do you guys see that? This indicator was saying, and it's not really, don't get a big, it's not an indicator, it's just swing trading. Right, the projected low was here. That's the projected low for today. Okay, so now you should be looking at tomorrow's entry. Okay, which means today you should be setting up tomorrow, which means today, oh, come on, I was trying to get this blue. Today is dead. You already hit today's target. So what you should be doing the rest of today is doing tomorrow's trade. Okay. You see what I mean? You shouldn't be concerned with today. Today is already done on Kiwi yen. Okay. And again, I'll show you bearish profit zone right here. 70, 86.5. We knew that yesterday. And the actual, well, let's just say it's precise. The actual is low 86.8. So we're getting down to within 0.3 of 1 pip accuracy. Not bad. But again, it's not predicting anything. It's just trading. You should already be able to do all of this on your own. It's just pivot points. So if you're a bear and you want to be short tomorrow, you need to get ready now. You need to be on a 5-minute chart or less, and you need to be setting your trades up to the downside if you are a bear. Okay? Cool. So whatever. Get ready, because this ain't funny. All right, so let's take a look at this one. Okay. I'll move my stop to break even now. Okay. Let's clear this out. Let's move this to weekly pivots, I guess. No, let's just move it to monthly pivots. Okay, so it's easier to see. Okay. So, down, 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 down. This is a monthly M3. Up, up. $5A cross down, short. Pow! Okay. Down, 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 down. Up, up. Could be a second chance. If you're a day trader, you're probably on that. Okay. Down, down. Up, up. Down, down. And this is very similar to the other pair. Like, you'd want that, but it's like a shallow lower low. And it lacks sort of the conviction that I would hope for. Because remember, I feel like I have first mover disadvantage on this trade, right? So I definitely need to keep it below this stuff. Let's just highlight it like this. Okay. So I'm going to be brave as long as we're below, well, we're at 74 now. So as long as we're below 74.20, I can use the 80-20 rule to stay strong. And if not, what do? Do I take a 30 pip profit or a 25 pip profit? It seems pathetic. But doing nothing is also pathetic. So anyways, I got all this. I got all this play. This is all mine. This is all mine for sure. So I just have to decide what am I going to do sort of with this area. Well, that was supposed to be dark orange. Looks like the same yellow. Okay. So here's the thing. If I'm right, this is what I told you a week and 2 days ago. 7 trading days ago. I said, I'm going to get short. And if I'm right, I'm going to be short for 7 weeks, right? So I'm going to leave my stop at break even because that's the plan. Okay? You get that? When I took this trade, I was not going for 25 pips profit. That's not the plan. Okay? Okay? So if a Trump deal, because that's what this is a delay is just a form of a deal. This could come, the market could rally up and I'm going to get knocked out at break even. If it's just noise before the date, because remember it's Sunday, there's a lot, right? There's a lot that can change between now and Sunday. And I'm already positioned well in some of these trades. And in other trades, I'm not positioned well and I'm going to handle it different, right? You know what I mean? So I did this well. And I'm going to carry out the plan. Okay? It's not like I'm not being stubborn, right? Famobix, he says, yeah, all or nothing. Well, I'm trying to portray like my thought process. And I'm not being stubborn. What I'm saying is I had a plan. When I sold here, I jumped in front of the market. And I never do that. But right? But in this one scenario, based on my planning of months, right? Imagine I said 27 weeks ago I would sell last week. So I did. So it would be embarrassing to take like a 26, 27, 28 week plan and squeeze 25 pips out of it. Like, really? So it's just the plan. Right? And I would rather get nothing and say that plan failed or let it run. Because I know little winners ain't going to do much for me. And it's the end of the year, right? It's the end of the year. The big trades are all gone. That's fine. So I'm going to let it run because it's supposed to be that way. And there's always news, guys. Let me tell you this. There's always news. There's always something. There's always some risk. Every year there's something that makes this scary. And this time it's like Trump can send out a tweet and kill this trade. Well, so be it. I won't lose money. I'll lose 4 pips. I'll mark it down as a failed trade plan. And what does the 4 pip loss do? First of all, I record it as a failed trade, which is great. Taking a 20 pip trade and calling it a winner is embarrassing. I did not plan 26, 27, 28, 29, 30 weeks in advance to make 30 pips and call it a winner. That's BS. That's failed. And all the 25 pips will do is lower my average winner, right? So like the one I took last night, 400 pips profit. Okay? If I record this one as a -4 loss, okay, let's say this one, Trump sends a tweet, this pops up, knocks me at break even. So now I got 2 trades on the record. One is positive plus 400. The other one is -4 loss. What's my average winner? 400. What's my average loser? -4. Do I want my losers to be small and my winners to be big? Yes. I'm going to need a calculator for this. I'm too tired to do math, but so let's do calc. So, what if instead I had pride on my winners? Meaning, I would rather take a 25 pip winner than record a loser. That means for some reason you take pride in your winners and not your losses. My book says you should take pride in your losses. So let's do this again. Hang on. My mouse is really messed up. I replaced the battery and it's not much better. So let's say I take pride in my winners. I just have to have a high winning average. I have to take this 25 pips profit. So now I got one 400 pip winner, right? And one 25 pip winner. And now I divide that to get an average by 2 trades. So I just dropped to 212. My average winner just dropped by 200 pips. So I could declare my stupid trade 30 weeks in advance, but I only got 25, and I'm calling that a winner. No, if that was a scalp, okay, then that's a scalp. But that's why I say you should probably keep your scalps on a different account. You should probably have an ECN account for scalping or a fixed spread account for scalping. But you shouldn't put it in with this account for that reason, right? So anyways, you see that? By declaring the 25 pip winner, I actually lose 200 pips in average. So what do you think looks better to a potential investor? Your average winner is 400? Okay. And you know the other problem? If your average winner is 212, what happened to your average loser in that scenario? I know it's only 2 trades, but what happens? Your average winner is cut in half. Your average loser is 0. Now, amateur traders think that that's a good thing. But what you've just declared to your potential investor is you don't know how to take a loss. You take pride in your winners, and you'll do whatever it takes to avoid recording a loss. And if that means holding a loser down -100, -200, -300, -400, -500, you can't take the loss because you're worried about your winning rate. Investors will never, ever, ever invest into you unless you can clearly show how you manage risk. Having a high winning rate shows you don't know how to take risk. And you will never raise money from a sophisticated investor. If someone falls for that, oh man, I got 92% winners, I never lose. Yeah, forget it, dude. You might fool your uncle's boyfriend, but that's not how it's going to work. Anyways, moveon.com. So everything's holding where it should. Okay. Remember, this is your Euro Yen weekly short zone. We just talked about it. Somewhere just below 50. Looks like it got to 48.5. A pip and a half from the midpoint psych level. So anyways, we'll see how that goes. Sing, sing, a-dee-da. Diana's caught the trade on August 28th. Yeah. Diana said, on August 28th this year, you said, this is the top. And I was right. Sweet. Nice. I love it when I do stuff like that. And I'm right. I hate it when I do it and I'm wrong. All right, so let's do some technical analysis. Let's see. I think I fixed this template. So this is weekly, I think, right? Well, let's just put the cluster on the confluence. And I moved the watermark, right? Is that better, guys, having the watermark here? Maybe in this case it's a little weird with the price in the way, but... Okay. So, what did we talk about 100 billion years ago? Down. Oh, let's get off that pink. That's annoying. Okay. Down, 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 down. Double bottom, right? Higher high. Remember, I was a little worried again. It's a little flat. A little shallow. But the higher high predicts a higher low. Higher high scenario. Whoop. Now, I actually don't want that, but that's what that says. But remember, technical analysis is very much lagging most of the time. So here's what I want. And remember, it's what I want. It's not what I see. There's two different things. What I want and what I see are two different things. So I don't see it, but this is what I want. I want the down, 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 up, up, sell at 110.87 to 111, and down, down, down. That's what I'd like. Let's do it darker purple so it's just easy. Okay. Wouldn't that be nice? Now, on the longer run, I do want US dollar to weaken. And I've talked about this a lot lately. When the market believes the Fed is done cutting, the dollar will weaken. How many people have that now ingrained? That I've told you this so many times. And in fact, it was still when they were cutting. I said, when they're cutting, dollar's going to get strong. But as soon as the market interprets what the Fed is saying as that they're done cutting, then at that moment, the US dollar will weaken. And we looked at the pricing of money market loans between banks. Okay? Greg, that was many years ago, and market conditions have changed. They're doing it for different reasons. Okay? That's why I like the whole past performance doesn't predict future results kind of thing. So in this case, so Danielle or Daniel, when are they cutting? Look at the Fed funds futures market, as I've clearly trained everyone multiple times, and use that to help you discern whether the market is pricing in a cut or pricing in no cut. You can even tell which meeting they're pricing it in for because of the length of the loan and the price of that loan and the time value of money. Okay? Don't get duration confused with maturity date. Duration has to do with the sensitivity or volatility of price changes in the futures market for those Fed fund loans based on perceived interest rate changes by the Fed. So again, if the Fed, let's say, I'll just make up a number. If the Fed raises interest rates by 25 basis points and the futures or these money market loans between banks jump 50 basis points, there's a lot of volatility to that change. Now, the longer dated loans, if you will, have more sensitivity to interest rate changes because they're more likely to change. And if they do change and you have an opportunity loss or an opportunity cost, it could be more significant because if they might change 2 or 3 or 4 times and you could have made, let's say, instead of 1.5% here, if you had just waited a little longer, you could have made 1.75 or 2.0 or 2.25 over that time because it changed multiple times over the course of the 2 years of your loan. And therefore, you're going to be more sensitive to that. Your price would have to drop more significantly. And that's really the duration, the volatility or the impact, the negative or positive impact of interest rate changes to your particular loan, aka bond, if that makes sense. So all this information's out there, guys. Right? This is why I want you to stop reading newspapers, stop watching people on TV. And you need to become the expert. You should go open up the Fed Watch tool, look at all the pricing in money markets, and say, oh, the Fed's not expected to raise interest rates until September. Okay? 2 things will happen. Your general bias, if that's true, I don't know if it's true, that's for you to find out, but if that were true, your general bias would be in times the dollar's weak, you're going to sell the heck out of the US dollar. And when it happens to get strong, for non-fundamental reasons, for market condition reasons, you'll stop selling the US dollar. And then as you get closer to September, if you see they might cut interest rates again, then you'll change from a dollar bear to a dollar bull. Most likely they don't do that back then. Maybe things improve. And if so, what if they raise interest rates? Raising interest rates would actually weaken the dollar in that scenario, which is different from a few years ago, right, Gregors? So anyways, I want you to be the expert. And you should probably get used to explaining these things to people, to your spouse, to your dog, to your children, and say, hey, I learned something very interesting. You know, banks lend money to each other, and they're obviously, educated, experienced, institutional players. So they know what they're doing. These guys have PhDs from, Ivy League schools in finance and economics. So when they sit down and negotiate billion-dollar deals with each other, it's smart money versus smart money. And they have to price in what they believe the future is going to be like. Things like, what will the monetary policy of the central bank be in 6 months and 12 months? And if there are changes expected to happen, what will they be? How will they impact money and the price of money? And then, even though they don't know if it's going to happen for sure, there are risks and opportunities that need to be priced in and discounted over time. And all this gets done and shared with me. And based on my analysis of all this, the Fed's has stopped cutting interest rates to at least September. And even by then, market conditions will probably have improved, and we'll find out that they will not cut at all in 2020. And all of a sudden you're like, dude, seriously, what? Dude, look at this guy coming in hot with the fundies, right? That should be you. Okay? That should be you. Okay? All right. So this is going my way. This is not going my way. This is going my way. Well, there has to be some profit taken on oil. And we did talk about the OPEC cuts were not enough, right? Remember that? So here's the big OPEC move. Shut that down. And in fact, wasn't this NFP? Didn't I do this in NFP where I'm like, I had an arrow, I had an arrow, I had an arrow. I'm like, this ain't going up no more. Done. Shut it down. Shut it down. Or shut it down. Shut it down. Shut it down. So anyways, we got to breach the 21, kick off the 55, right? Lower high off of 59, and then down. Maybe. Jigga, 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 Slim Shady, right? Oh, thank you for subscribing. I don't know why I put it over there. Oh, that's interesting. I see what it did. Or did I? Anyways, thank you for subscribing. I appreciate you. Well, you took the shot, huh? Good for you. I don't feel comfortable with this one anymore. I'm just going to bail on it. Goodbye, beast, but it's time to go. I'll catch it later. I mean, I'm only down 6 pips, right? But what am I going to do? Wayne. Hang on. I'm thinking. Hang on. Hang on now. That just does not look good to me. I don't care. Well. Yeah, you know what? I don't care. I'll come back. If it drops, it drops. I'll catch it later. I just don't like it. My trade has failed. I wanted to keep it below that. Didn't do it. Great. Whatever. 7 pip loss. Cry me a river. If it drops, I'll get an opportunity to reload. Don't worry about that. All right. So that's fine. Oh, we got to do gold. 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 Well, how should we analyze this? If I were a bull, let's do that. If I was a bull and I was day trading, what would I do? First of all, I'd be day trading on a 5-minute chart, and I bought it here yesterday and this morning. Oh, so I'd be long around this 60, 1459, buy zone, 1461. Whoop, whoop, whoop. Well, we're at 1468. $7, brah. $7, but it's telling me I should probably be scaling out for profit. Now, here's the trick to this. You have to always think ahead. So this drop here, oops, delete, delete, delete. This drop here may be the profit taking for today, and this drop is in tomorrow's buy zone. That might be the tricky part of this. So let me show you tomorrow's buy zone. You got to go out a little farther. Let's go to a 15-minute chart. And so you see tomorrow's buy zone. This is tomorrow's trade plan. And today's trade plan was this. Okay? Buy here, exit. You see that? That was today. Bullish profit zone. So you'd buy it here, you'd exit here. And then it dropped like a ton of bricks. Right? Down, 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 down. Into tomorrow's buy zone. Which is what? Roll reversal. So you have a double bottom. Oops, double bottom. Which is here. We call this 1. Then you have the higher high. Really. Right? Higher high. And then the higher low on the roll reversal. So we call this a 1, 2, 3 pattern, right? My download link at FX Bootcamp. What download link at FX Bootcamp? Are there download links at FX Bootcamp? So anyway, so if you took that as a second chance, guys, your target between now and tomorrow is 1474. Take care, grind. Yeah. So Samuel, right? So whoever said the something about a download link on FX Bootcamp, what download link? So email me about that, Wayne at fxbootcamp.com. No, watch every single video, Samuel. Start with the basic ones like, start with the oldest ones, right? Start with like the basic training program, and then focus on like MT4 and technical analysis and taking control, and then work your way into like swing trading and fundamentals. Okay. Okay. Yeah, it says, are they new pivots? No, they're not new. They're not new. They're just changed. Okay. Oh, I forgot it's still there. Oh, it's probably still linked on fxbootcamp.com. Yeah, we don't use that anymore. That's probably what it is. Yeah, if it's still, yeah, I'll have to look at that. Sorry, with school and work and raising a family, I just missed these little details. So yeah, somehow you're getting to, I guess you're going to charts.fxbootcamp.com, I guess is what you're doing. That would not work. That is correct. Yeah, this is, I call this, what I've been calling this is a day trading bullish setup. So there's a combination of trends. So you can see medium and short-term trends as identified by regression channels. And because I've already decided I'm a bull, this indicates my buy zones. So I would have made money here and I would have lost money there. Yeah. And then it said if it dropped, you would buy it here. Now, the interesting thing is, as this is falling, it was adjusting, I'm telling you. And then here, right? And then tomorrow's buy zone is here. So you have it's always forward looking, but it's always bullish. The buy zone that today was 1461.42. Okay? So you should be long in here. Right? All that kind of stuff. It doesn't tell you to be a bull or a bear. You tell it to be a bull or a bear. So, like, for example, if you're a bear on this, it's the same thing, day trading bearish. Okay? You would have sold here and made a ton of money. Okay? And then not quite, nope, and not getting setups. Okay? So you still have to make decisions. And it's the same pivots, guys. All I did was change the colors and cut some lines out because lots of people are saying, I just can't get it. I can't get it. There's too many lines. I'm like, really? You sell at the M3? What's but I'm so used to it. So if I can spend some money and have something tweaked so it's easier for you to see these things as a newer trader, then I'm happy to do so. Okay? And then, of course, I'll put this on metatraders.com. They're not available. I'm still developing them. I was doing this yesterday in school. Notice how the tomorrow's profit zone is moving up. It just moved up. Yeah, boy. So anyways, nothing's changed, guys. Like, nothing's changed. You should be able to trade like this. It's the same thing. It's the same thing. It's the same thing. It's the same thing. I'm just trying to make it a little, I don't know, if I can make some tweaks to make it a little easier, then I'll try doing that. Okay. Okay. All right, Tony, Big T. Benjamin says, should I stop watching your live videos and finish? No. Take your time, man. Take your time. You only have a certain amount of time, like a year, I think. So take your time, but don't take years. All right, what am I going to do? La la la, la la la. What do I expect during the UK general election? Volatility. So let's take a look. Let's move off of this. I just need fresh air. Need some fresh air, man. Let's get on. Let's take a look at nat gas. That's a big change, huh? Okay, let's go out to the 4H. So we're at the bottom of the regression channel. We're 2 standard deviations below the mean. It's interesting. It's been a while since we had something like that. Right? Pretty unusual. I thought I did exotics today, didn't I? I didn't do peso. Yeah, let's do that then. I thought I did it, didn't I? I thought we did Euro ZAR. Oh, maybe I just talked about it. No, I showed you this. That I started with exotics. Maybe you just weren't logged in yet. So let's take a look at Peso. I haven't done this in a long time. So apparently I've been accused of saying that this is the top for the Mexican peso for the year. Who said that? Well, who said that I said that? If so, that was a great call, huh? Probably had something to do with the Fed. So let's take a sort of a bigger look at this. Let's change this. I don't know if this is monthly or not. Let's take a look. Okay. So right now the projected low for USD Mexican peso is 19. Okay. An entry at 1959.9999 predicts a drop to 1898.84. So let's just call it 19. Okay. That's what the technical analysis predicts. It's not me saying anything. If the market stays bearish and that is the high for the month of December, then the projected low was down. Oh, you caught the double top. Well, congratulations. Way back there, the other double top. Cool. Yeah. Yeah, sweet. Nice one, huh? Every once in a while I get lucky. Thank you, Anthony. Appreciate that. Yeah, guys, if you are enjoying these webinars, please let YouTube know that it's quality content. You can do that by leaving a like, subscribing, and then, of course, leaving a comment. If you could take a moment to do that, it'd be greatly appreciated. Again, not for like me particularly, just to tell YouTube this is good stuff. Okay? Okay. Yeah, sorry I'm so tired today too. Man. What should we take a look at? Someone asked something about something. Somebody asked something about something? Euro Kiwi. Oh, these crosses. All right. Euro Kiwi. Let's do some crosses. All right. I feel like we should have some music or something. Let's do some crosses again. No, I generally don't trade euro pound. It's just because I'm old school. They're used to, and again, you have to put it this way, guys. I generally don't do, look at that. I generally don't do crosses. I have nothing against crosses. I generally don't do them because I'm a macroeconomic trend trader. Okay? Trading euro against pound is a little more micro. Trading euro against Swissy is a little more micro. So what I tend to do is I say risk on or risk off based on global macroeconomics. I try to incorporate everything into the play. Okay? And so the funding currencies are what are important to me. Dollar, Swissy, yen. And then, right, my macroeconomics tells me, should those pairs get strong? Should those pairs get weak? But that's the basis of my analysis. If I decide weak, then I go look for strong things. If I decide strong, then I go look for weak things. And that has to do with relative strength exercises. Okay? So it just wouldn't be a common scenario for me to say Euro Kiwi. Because neither are a funding currency. Okay? It's not that you can't or you shouldn't. It's just I don't. Okay? Now, sometimes I'll make a central bank play. So there was a time when the Swissy was ridiculously strong for normal reasons, or let's say the pound was ridiculously weak, or how about this 1 year? Actually, I think it was about 2 or 3 years. We had this period of just crushing the Aussie dollar. And it was great because at the time, Governor Stevens of the Reserve Bank of Australia would talk down the Aussie dollar. And in that scenario, I wasn't doing sort of a global macro play. I was doing an RBA play. And if the RBA wants the Aussie dollar to weaken, well, then I'm obliged to help because I'm a good guy. So all of a sudden, I would sell Aussie versus everything and anything. In that case, right? Short Aussie Swissy, short Aussie dollar, short Aussie yen, short Aussie pound, short Aussie Kiwi, short Aussie lira, short Aussie, just anything, short Aussie, short Aussie, short Aussie. And in that scenario, I could get into an Aussie Kiwi play where 99.9% of the time, I'm not trading Aussie Kiwi. You can trade Aussie Kiwi. I know lots of Aussies and lots of Kiwis, and they love trading Aussie Kiwi. I don't trade Aussie Kiwi because 99% of the time I'm doing a global macro play, but the other period I might be doing a central bank play. It's a policy play. Or like USD Mexican peso, to me that's a flow trade. I'm trading the flow, yo. It's remittance, baby. Right? But it's not a macro play. And it's not a Central Bank of Mexico, Bank of Mexico play. Right? I don't even know who's in charge anymore. Right? It was Carson's, wasn't it? He's long gone. So anyways, so I don't even know who's in charge of the Bank of Mexico anymore. But I play that very specifically. So with all of that in mind, do I trade like Euro Kiwi? Not very often. No. Does it mean you shouldn't or you can't? No, I never said that either. Okay, so let's do that. So a Euro Kiwi play looks like that. Let me put the updated template on here. Okay, it's just moving the watermark. All right, so let's analyze this. OOP hit the target. We're done. You should stop trading Euro Kiwi the rest of the month. Was that too fast? Let's do it again. It's out of position. Hit the target early. We're done. No reason to be a bull. It's definitely bearish, but we've hit our target. You're done. Happy New Year. See you in 2020, bro. Anything after this is just you're trading volatility, you're trading blind, and I don't like your odds. Okay? There is a counter trend trade in here. I don't think you need it. Take the rest of the time off. Go put on your Santa suit. Put lights up on your house. That's less dangerous than trading that. Euro ZAR. This is the one I got knocked out in last night for 400 and something pips. And I think I moved it, the stop just above here. We did it yesterday, so you can just watch yesterday's video. Yeah, I think I got out here just above this. So, pachow, pachow, goodbye. Cool. So anyways, Rand getting crushed. Don't want to be short that anymore. But it was good money while it lasted, right? A lot of sideways action. Cool. Okay. So if it's going from bearish to bullish, I just don't want to be involved. Wayne, does market manipulation really go on? It's a $5 trillion a day market. So who's got, let's say, 1 trillion that they want to drop on one trade to manipulate the market? Nobody. Wayne, do you think you could make a video of my day? Well, I'm a pretty private person. YouTube.com/Bootcamp. Not that big. Not a trillion. But you know, he and I have a connection, right? So it's funny that you bring that up.
U.S. markets is driving some investors to foreign currency. Joining us again.
So the closest thing would be this one. And then have you guys seen the one? I might have put it on Forex.Today. Forex.Today. Lifestyle. Let's try that one. I think I put another one there. No. Take the dot out. Still doesn't come up. Come on. Used to yell at my Google friends all the time. They're like, oh, we're all about search. I'm like, your search sucks, especially on YouTube. They get so upset. I guess I could do Forex.Today, Dubai. Dubai. If you're a local. Still doesn't even come up. Amazing that it sucks so bad. All right, let's go back to Forex.Today. This monitor is so big, it's crazy. All right. Something's really slowing my processor down too. Oh, I know, streaming on top of streaming. It's like a million years ago. It's so amazing that you can't just search, right? That it can't find it. Unless I didn't put it here. I thought I did. Maybe I put it here. I think I even called it lifestyle. It's so amazing it's not there. Does anyone know what I'm talking about? In response to your lifestyle thing? Anyways, I don't know what it is. Oh, here it is. Forex Time Machine. Forex Lifestyle, my $5,000 a night hotel room. It's on Forex.Today. The funny thing is, that was 10 years ago and it was $5,000 a night. So it's probably more now, huh? Anyways,
January
so that's the
2017.
thing. Those two videos are the closest thing to lifestyle. But what's my lifestyle like? I don't sleep
Hey, I
enough.
thought I'd give you a quick tour of my hotel
Where
room
did it
here
go? I
at the
hit
Burj Al
so
Arab
fast.
in Dubai, and just sitting here on the looks like a bed.
Anyways, let's get rid of that. Yeah, and I raise children. I run around. I do errands. I take children places. I pick children up. Go to the grocery store. I spend a lot of time reading. I spend a lot of time writing. I spend a lot of time researching. So right now, when I'm done the webinar, I will continue to reorganize Goldman Sachs. So you could look at the normal business model of Goldman Sachs that they've had for 150 years, where they manage money for institutions and countries, and then they have like an investment banking trading arm, although trading and prop trading have been banned in the United States, so they lost all that business. So when Blankfein left and Solomon came in, first thing he did was try to get into retail. Because part of the 2008 financial crisis is the government said, hey, Goldman Sachs, do you want free money? And they're like, heck yeah. They're like, oh, well, you have to be a bank. All right, we'll become a bank. So they became a bank. So anyways, the first thing he did is he went to GE Capital, which was drowning, choking on blood at General Electric. General Electric, because of the credit markets being frozen, couldn't even keep the lights on. They made billions of dollars a year and they couldn't even keep the lights on. So they were selling things. So remember the GE profiles, that appliances that all rich people would put in their house? They sold that. And remember GE Capital? They sold that to Goldman Sachs. So Goldman Sachs buys this bank basically from General Electric and they turn it into Goldman Sachs Bank, GS Bank. Then they're like, oh, wait, we can't call it Goldman Sachs Bank because then we can't have retail money mixed in with institutional money, you know, filthy retail like us. So they renamed it Marcus. And then they bought like ACO, and then they bought, which is like financial planning. And then they bought a bunch of other sort of retail, generally associated type companies and technology. They bought some companies just to get the engineers in. And then more recently, they got into credit, like through credit cards, which is another retail play. And they paid too much, but they did a deal with Apple. So now that new Apple credit card is actually Goldman Sachs card, which is kind of interesting, right? But when you analyze it, Goldman Sachs on the retail, all these retail things that Solomon have been done, might make a lot of sense, but it's very fragmented and it's not put together well, and there's some branding issues. And so that needs to be tweaked. And also, Solomon needs to make some, you know, let's say some acquisitions and some additional strategic partnerships moving Goldman Sachs forward if they want to continue the retail play, which they do. So they just got to do what they're doing better and more consolidated, and then have a better strategic plan. And that's what I'm doing for them. So that will be done soon. Yeah, that's so there's a typical day. So Anthony says Warren Buffett gave the loan to Goldman Sachs. Sure. So there's a long history with that. And that's one of the things I'm exploring. So if Goldman Sachs wants to expand not just retail, but into small and medium-sized enterprises, then they could do things like get into insurance, small business insurance. They can get into things like payroll. So I'm like, right, and some other things. And let's just say Warren Buffett owns a bunch of companies that he could probably sell to Goldman Sachs for a nice, handsome profit. So I'm looking at that kind of strategic alliance, but I don't trust Warren Buffett. I think he's a cutthroat. So even if he gave you a deal, I don't think you want to take it. But there are other interesting things that Goldman Sachs could do. So it'd be great if Goldman Sachs lent let's say your medium-sized business. Let's say you have a business with 300 employees. What if Goldman Sachs, you know, gave you loans and lines of credit? What if they managed your employees' 401k program? What if they insured the company and insured the officers, right? What if they handled your payroll, right? So what if they bought ADP? So once a month, instead of the ADP coming out before non-farm payrolls, it was the GS SME report. Okay. Joe says, have you gotten into the subject of pension funds? Well, I took a class on managing money for institutions, and I wrote a paper on how pension funds, insurance companies, and endowments could manage their risk better, and I created a risk model for it. And my professor, who used to run the largest endowment in the world, said it was brilliant. And so he and I have planned, and we've communicated, but I haven't had the time. But he and I have planned on writing an actual research published peer-reviewed paper, maybe put it into a Harvard Business Review or something. And I think if I did something like that, I could create a company out of it, but I don't need work, right? So, but anyways, yeah, so, but I think it'd be really cool to put that together and put that model together and then share that with institutional investors. Okay. It's just risk management, right? Stuff that you and I do all the time. It doesn't mean institutional investors do that, right? So to me, it's simple, right? That's simple. But to the rest of the world, it's pretty unique. All right. How can I make 50p an hour? What's a p? Doesn't sound like a lot. I would imagine if you were a bus driver, you'd make 50p an hour. I've seen stuff like that, Cash, but I don't think I've seen the Argyle one. Can you post a link or email me? Oh, pips. 50 pips an hour? I suppose you'd have to trade lira or Thai baht or something. Doesn't make any sense to even think that way. How could you force a currency to move 50 pips in an hour? It's a strange question. I don't know. Rana Saab says, hey, is it good to trade index options or futures? Well, they're taxed differently in every jurisdiction. So I'm not an options trader. I've passed the test at the NFA and all that kind of stuff. So I know it enough that it doesn't fit my personality. So I don't really like options, but I understand the idea of, the leverage and the built-in risk management of options. But it doesn't fit my personality. So I'd much rather be a futures trader because at least I can let my winners run kind of thing. And I like managing the risk a little differently. But that being said, depends on your taxation and your jurisdiction. I don't know where you're domiciled and all that kind of stuff. To each his own, really. It doesn't matter, right? Any other questions? It's 9:30. Stock market's up, or moving, I should say. Let me get off this rand. Someone asked about exotics, okay, well, I guess that's euro. Okay, so I want euro to weaken. I want Swiss franc to strengthen. That doesn't mean I want euro Swissy to fall. It just means it would fall under those situations. So these are weekly swing trades. Pretty obviously, this is a weekly sell zone. And this is this week's target. And that would just get us basically to a bottom. So I'd call this a downside range. And this is probably an upside range. And then here's your secondary, right? So you'd almost trade it like a mean reversion where you got this going on, right? Bouncing between support and resistance, and this going on. So if you break up to the upside, you're going to be stuck in there. So I'd almost consider it like a regression channel. So this is not going anywhere except to the bottom of here, and then I'm not really sure of anything, but based on seasonality, I do want this to make a lower low, lower high. Not that I care about Euro Swiss franc directly, but indirectly, what I want would make a lower low. Okay. So again, you can see if you're using here, this is your monthly play, this is your monthly target. Your weekly play is here, and here's your weekly target. So you see how there's a bit of a confluence there? So your first chance was here on the first day of the month. Your second chance was here on the first day of the week, right? The high one is targeting here. The low one's targeting here. So you might as well just call it whatever that is, 108.5 and run. My next book once I graduate and finish my master's degree. By the way, the class I'm in now is my last finance class. Well, I'm in 2 classes now, but the finance class I'm in now is my final finance class. So I'll have that graduate degree in finance, and then I have a couple of more management classes. So I have like diversity and inclusion. I'm taking in a diversity and inclusion class. So got to know that if you're a manager. So I forget what the other one is. Oh, the other one is negotiations, which is kind of interesting. So I'm coming up to the end of my 5-year experience at Harvard. The advice that I would give you to become a full-time trader is to develop a 5-year plan. Lower your risk, lower your lot size. Don't focus on money, focus on steady returns with low volatility. That's assuming along the way you learn technical analysis, because you can't trade without technical analysis. And then along the way you also develop things like fundamental analysis. Okay? But I would, if you're an experienced, educated person, I would, like I did with myself, I would go on a business planning retreat, and I would start with your mission statement, your vision statement, your operational direction statement, develop some KPIs, and put down some timelines and dates, and then bust out an Excel spreadsheet and do a 5-year pro forma cash flow statement and do some risk modeling so that you understand what you'll be doing over the next 5 years. And then go ahead and do the 5 years. Make sure you do not try to make money. Just try to be steady. Try to have low volatility. The money will grow, don't worry. And as your account grows, continue to lower your lot size relative to your account size, further reducing risk. And in 5 years from now, you will have skills and a marketable business. Okay, Ranasab? Leonardo says, is it true that Soros influenced the pound for his benefit? No, it's not completely true. George Soros, so most of you know, but maybe some of you don't. I sat on a board of directors. I was director of a company, and George Soros was on the board with me. And George Soros, he doesn't do it for his personal gain. I think he loves capitalism. Okay? And capitalism really is a free market thing. So I don't know if I would take it as far as free market, but somewhere between total free market laissez-faire and capitalism. Like it has its own built-in checks and balances, but to allow it to work, you need to have booms and busts. Well, now governments are involved. And that, 100 years ago, governments built roads and hospitals and stuff. But they didn't do anything else. And then provide an army if need be. But they didn't really do anything else. And over time, especially between the period of World War I and World War II, governments around the world took larger roles, like worrying about people having jobs and worrying about inflation and worried about bank failures and stuff like that. Before really World War I, governments didn't involve themselves with that. They didn't track the unemployment rate. It wasn't the government's job to care if you had a job or not. It wasn't their problem. So governments have expanded these things, and over this course of time, the role of government, the invisible hand of government, if you will, and the invisible hand of capitalism, they don't work well together. they can't kind of shake their hands properly, right? They can't work well together. And the government comes in with good intentions and say, okay, we're responsible for our citizens. And these boom and bust cycles are very painful and very expensive. So we're going to jump in and try to like protect people. If they lose the job, we're going to give them money, right? Or if the bank fails, we'll bail out the bank. Or, you know, all these different things. What it does is it retards capitalism. It impedes capitalism. If the bank is going to fail, it probably should fail, right? All this kind of stuff. So George Soros, as a lover of capitalism, because you got to think about it. Once you got $1 billion, $2 billion, $3 billion, you don't need another $5 billion. You're not doing it to make money. So he sees, like in the case of breaking the Bank of England, there was a flaw in the system. And it's the system that he loves, but he's wise enough to know that it's not a perfect system. And if he can expose the flaws, then maybe these things get fixed and you plug, sort of like the boy that sticks his finger in the dike, right? Plug the hole and eventually maybe it works, okay? So the Bank of England is planning on entering the Eurozone. Okay. And to enter the Eurozone, they are required to meet certain very clear expectations. You must have this, you must have that, you must do this, you must do that, and if you check them all off, you're in. Well, George Soros is like, well, why the hell would you tell us all this stuff? Because he's like, now I know what you're going to do before you do it. And if you tell me that and you tell everyone else that, they're just going to front run you. So that's what he did. Now, the interesting thing is the Bank of England has a lot of money. George Soros only had billions. He only had tens of billions. He might have only had 100 billion, whatever it was. Maybe 300 billion. It was billions, but it wasn't trillions. He didn't have unlimited. Except in the financial market, you can be leveraged. So let's say you have $300 billion, but you can leverage 40 to 1. So he traded against the Bank of England, knowing what they were going to do it, right? Knowing what they were going to do before they were doing it. So he just would front run the heck out of them and make them pay too much, 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 until they're finally like, we're out. He's like, we're not going to do it. We're going to keep the pound. We're not going to adopt the euro, all that kind of stuff. We'll have some sort of trading relationship, but we're not giving up the Great British Pound because we just cannot afford to do it. Did George Soros do it to make money? I think the quantum fund at that point was already closed. If not, he closed it right after. So it was more like, if he wasn't going to do it, someone was going to do it, or should do it, or needed to do it, or whatever. But he was trying to expose a flaw in the system with the hopes of getting it fixed. Now, if he happens to make, $2, $3, $4 billion doing it, irrelevant. Irrelevant. I mean, it's just a consequence. Okay, fine, great. But that's how he made money all the time, right? He would find flaws in the system and then expose them with the hopes of not breaking it, fixing it. Okay? So that's a lot different to whoever asked the question, did he do it for himself? No. He already had enough money in the world. Okay? I think, so his partner, what's his name? I always forget his name. Stevens, Collins, something. Anyways, his partner wrote several books. One of them is Adventure Capitalist. And so when I get time to start our book club, that'll be one that we'll read. No, not him. This is where he modified a Mercedes and made it a 4x4 and drove around the entire world. And he's rolling through the worst and best parts of Africa, right? And learning by being on the street and talking to people. And he came back and became the biggest commodities trader in the world, made billions doing that. His name always eludes me. And Jim Rogers, thank you. Yeah. So that'd be something like, I think we should read his stuff. He has some pretty interesting things. Like, he's like, be careful with the Chinese, never deal with the Russians, right? Stuff like that. And he said he drove into Botswana and got to know the people of Botswana, got to know the economy, went to the stock exchange with some big shots there because he's Jim Rogers, right? From the Quantum Fund, George Soros's buddy. So anyways, he gets the royal treatment. He looks at the stock exchange and all the companies involved and all the people involved. And he's like, I'll buy it. And he just made huge investments. He just threw money at Botswana. He's like, this is how you do it. And he's like, this is the best place in Africa. Boom. Right? Just like that. Because he drove across the entire world. He drove across China and Africa and Russia and Eastern Europe, back when you couldn't do these things. It was pretty interesting. So yeah, so then he then moved his entire family to Singapore so that his children would learn Chinese. And so I read his book because he never had children. He never got married. He always saw it as a weakness. And then suddenly he's 70 years old and he's realized now that he's done with work, he kind of wants lineage. He's like, I should have had kids. So, of course, he marries like a 30-year-old supermodel and gets her knocked up and has a couple of kids. And he's 70 years old and he's a dad of like a 3-year-old and a 2-year-old. Like, amazing, right? Like, you ain't going to see, right, much. So he wrote them a book with his advice. And his advice, if I remember correctly, was get very, very good at calculating basic math in your head. Okay? Learn a second language. Oh, and number 3, be able to read a spreadsheet quickly. He said if you can do those 3 things, you'll be hugely successful. He's like, right? As an American, if you walk into a room in a foreign country, everyone assumes you don't speak their local language. So if you walk around the room and you're in China and you speak Chinese and you just kind of keep your mouth shut, you can hear what they're talking about and what they're saying about you. You'd be able to calculate math quickly in your head, just simple math, but to be able to do it quickly. And he said the spreadsheet stuff, he's like, inevitably, almost every presentation, every pitch, every board meeting, everything he ever goes to, he sits down there, some guy goes to the front of the room, puts up a big spreadsheet with a bunch of numbers and starts babbling. And he's like, if you're good and you know what to look for, you can just look at it and say, he's made a mistake. And you need to be able to do that quick because everyone else just glosses over and says nothing, right? They're just like, oh, that's so complicated. There's numbers all over the place. Right? And he's like, if you're really good, you'll say, oh, that doesn't make any sense. You can stop the person right there. Yeah, that doesn't make any sense. And he's like, it's almost every time he sees one, there's mistakes and errors. Oh, well, that's just the Excel formula. I guess I made a mistake. Right? So those are the 3 things that he said. So I'd like to read more about the adventures he had traveling around the world as a vagabond billionaire and the lessons he learned about commodities and trading. So anyways, there's lots of interesting people. And so that's George Soros's partner from the Quantum Fund, right? Does that sound like someone that's doing it just for his money? Just to make more money? Would someone that's doing it just to make more money get in a car and drive around the world for 2 years, walking dangerous streets and stuff like that, and negotiating for sweet potatoes because it's a way to learn about the local economy and the local people and the local place and the powers that be in their general economy? Like, doesn't sound like it to me anyways. I have another question. Is advanced math necessary to be a good trader and manage? No. If you're going to do calculus, Rana, right? if you're going to do calculus, it helps you with economics, right? So I have a degree in macroeconomics, and it was heavy in calculus. Do you need it? No. If you're going to be a PhD or quant, yeah, you're going to need it. If you're going to be a trader, no. Okay? But you should have a non-calculus grasp of economics and finance. Okay? So that's why my degrees are both in economics and in finance. Economics tells you what's happened on a global scale or at an economy scale. I hate micro. I don't like talking about, lowering marginal costs through economies of scope and scale and all this crap. I don't, right? Oh, you just shifted my indifference curve. I got your indifference curve right here. So I'm not a micro guy. I'm a macro guy. I care about the world. I care about the entire economy. Okay. And then finance is about the future, and it has to do with cash flows. But the value of money, right? And the value of cash flows kind of helps me with why do people move and behave the way they do in the markets, right? So there's the behavioral finance aspect of my studies, which I find very interesting. And then I combine that with macroeconomics. Together, at least to me, I find it very, very interesting. And if I did a PhD, I think I'd move away from finance and move away from economics proper. I think just out of my own curiosities, I'd study economic and financial history, which I've actually done fair about. I can probably go back at least 1,000 years in European history. Not so much in Asian history as far as economic structures and political structures and the meeting of international and political economics and all that kind of stuff and how that directly affected the economy and did not affect the economy. But I can tell you, like, I wrote a paper on how the Black Plague was the best thing to ever happen to Europe. And very quickly, with the population dropping in half, feudalism fell apart. And all of a sudden you had city-states like Genoa and Venice, and their city councils were running things basically as autonomous countries, but it wasn't people ordained by God, it was business people. And they created city councils, which was a form of democracy. And then that got more sophisticated as trade started expanding when technology improved for shipping. So suddenly the Portuguese were in India, and the Italians were trading in the Middle East, and and the Spanish were catching up and were soon heading off to South America because everything else had already been taken. And all of a sudden, bankers had to do things like create insurance and all that kind of stuff, and like insuring these voyages and all this kind of stuff. It was very, very interesting. And yet China did not suffer the effect of the Black Plague. And what happened? Feudalism stayed around another 500-600 years. Where basically you have like a king type person and everyone obeys the king, right? Now that ended up where, they all attacked each other until you had one unified China, but it delayed progress by hundreds and hundreds of years, where the Black Plague sped things up and created things like entrepreneurialism and democracy. See, like before the Black Plague, if you were a farmer, there was no reason to look for improvements in efficiency by creating better technology or better processes, right? Because the king would just come in and take it all and you wouldn't get it, and he would just give you enough to not starve. So if your land produced more, you just gave it all to the king. So you're like, well, why the hell would I do that? You did the bare minimum. You did just enough to not get killed, right? So when the king died and all the land suddenly became available, there was more land than there was people because 50% of the population died. So they're like, well, now if half the farmers are dead, who the hell's going to like produce the food? So people were like, just take the land. If you know how to grow food, please grow food, and we'll pay you handsomely for money. So the value of commodities skyrocketed because half the farmers were dead. So now you can go in, you're like, okay, I got my land, and now how can I increase yield per acre? Well, I need better tools, and what if I furlough some of them and rotate my crops and do all this, and I'd have a higher yield and I'd make more money, and I get to keep the money because I was a smarter farmer, right? And all this stuff happened because of the Black Plague. Isn't that interesting? So I'd probably go back and I'd love to study the history of everything from a finance and economic and even military strategy point of view. But anyways, I digress. You ask, I answer. So I feel like I've gone too long today. What has it been, 2 hours? Not bad, right? So please like, subscribe, and please leave a comment on the recordings. So, okay. This will be available in just minutes up on YouTube. Please leave a comment. If there was something of interest that you liked or didn't like, right? If you like the new tools that I'm playing with, if you like the discussions we've had, if you like the trade plans we created, all that kind of stuff, please document that, okay? Let YouTube know that this channel is important to you. Peace on earth. May the pips be with you. May your profits be above average. And thank you to Traders Way. Whoop, whoop, whoop. Thank you to Traders Way for making this possible. Make sure you visit tradersway.com and open an account, okay? Pay it back.